Morning, Steve Freedy in Chicago with the morning grain comments. Markets are pretty quiet overnight. Beans and corn a little bit lower, wheat about unchanged. Yesterday we had a big down day led by the beans. Some people link that to very heavy U.S. farmers selling over the weekend in beans, and maybe some of the best bean movement that we've seen this harvest season. The three things that we'll be trading, number one is weather. When we look at weather, there is a rain system currently in the southern plains. It'll move across the Midwest in the next couple of days and could slow harvest down, but the forecast for the weekend and early next week looks favorable to resume harvest. In South America, it looks like both Argentina and southern Brazil is going to get some good rains this week, and that'll help conditions down there. So from a weather bullish standpoint, weather's kind of taken a back seat than it usually does this time of year. When we look at money flow, the commitment traders reports slowly coming out and shows us that the funds are still long beans and meal. They have bought earlier in October a lot of wheat and still short corn. And so this kind of makes the market somewhat vulnerable, especially on the wheat and bean side, for additional long liquidation if there's no bullish news. The third thing is supply and demand. And yesterday we've got some crop ratings that shows that the U.S. corn crop is still rated good. Harvest is moving along at an average pace, and so is the soybean harvest. And the winter wheat crop conditions dropped a little bit in Texas, but overall conditions are mostly favorable and suggest that on November 8th, when the USDA comes out with the next crop report, crops should be bigger. Supply and demand should show bean, at least corn carryout up, and the bean carryout is up to demand. Yesterday we had very good export inspections in the beans, and I think the market feels that bean export interest is higher than USDA's number and could offset the higher crop. Still, crush margins are starting to decline in China, and that could slow some of their buying pace in the future. So in general, we're looking at, especially 2014, those July through new crop soybean prices may be too high. Corn still may be too high, and wheat may be too high, and that's kind of where the focus might shift now in selling those deferred contracts. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.